Hey everyone, Anthony Venuto here with In Touch Mortgage Solutions. It's Friday, Finance Fridays, and thank you again for tuning in for another episode. On this episode, we're going to talk about home prices actually going up and who it's impacting with interest rates going up as well. Stay tuned, we'll talk about it next. Once again, I want to take this opportunity to thank all our supporters and viewers of the channel, everyone taking the time out of their day to leave those comments and feedback in the comment section below. Don't forget to hit the like, share, and subscribe button and that notification bell so you can get notified every time we post a new video. Now, back to the video. So just in case you're not aware, on April 13th, the Bank of Canada increased their overnight policy rate by 50 basis points, the single biggest jump that we've seen in the last 20 years plus, 22 years, basically bringing the overnight policy rate to 1%. Now, obviously, that is a huge move, and the Bank of Canada is also basically aggressively and with their hawkish tones coming out of the Bank of Canada and the Governor, Tiff Macklem, we're starting to see indications that they're going to increase rates further. And we are anticipating a further 50 basis point increase in June, depending on the data and what we're seeing. But now with inflation hitting 6.7%, the highest it's been since 1991 here in Canada, we can almost bank on another increase. Whether it's going to be 0.25% or 0.5%, it will yet to be determined depending on what data we see next month and in the subsequent months. Let me know your thoughts on if you think the Bank of Canada is going to increase it 0.25% or 0.5% or more in June. But now I want to take a sidestep on that. Now, with all the barrage of news outlets basically talking about the housing market slowing and, basically we're going to see how interest rates impact the housing market, which is obviously a very important conversation because interest rates in normal terms will obviously impact any housing market or most markets entirely, as the cost of borrowing for many Canadians will go up. However, there is an argument that is being discussed, and don't shoot the messenger here. We're just basically having a conversation about what's happening. And they're basically indicating that even with the rise in interest rates for many Canadians, because of the extremely low inventory that we're seeing here in Canada, and obviously with the projections to start doubling up home production, which is not going to happen for a few years, we are still going to see a run up in home prices, according to Royal LePage, an article published in Bloomberg, and several opinion pieces in the Globe and Mail. So these are some interesting topics, and I'm not sitting here and telling everyone, hey, home prices are going to go up and they're not going to come down. I'm just trying to provide a contrarian view to the scenario and say, what are we seeing here in Ontario and here in Vaughan locally that are indicators for us? Now, obviously, each market is going to play its independent role on, if you want to be close to a great school, listen, you're going to pay a premium to live in that area. And if homes come up for sale, which don't come up very often, you're going to bet it's going to hit a record price. And we're seeing that happening in some pockets of Toronto. I mean, obviously here in Vaughan, what I'm noticing with some of our clients that are on the street is that there are homes that are going to fetch over ask. There are still homes that are going to see multiple offers. Are they as aggressive as they were just a few months ago? No, they're not. Instead of seeing 12, maybe they're competing with 2 or 3. I still have clients that are able to get into an offer presentation, or some homes that are basically skipped multiple offer situation and just listed their home. We've seen a lot of homes in our area and they were following in our local community that have taken their listing off and relisted the home at the price that they're asking, and they're still catching a fairly good price. So obviously nationwide, there's going to be a difference in home prices as we see Ontario introduce its foreign buyers tax, basically, making it very expensive for foreign buyers who are non-residents purchase a home in Ontario. But what I'm going to think about that, and when I actually think about it, is if you have taxes in Vancouver and Ontario, and if the federal government doesn't actually initiate the ban for 2 years on foreign buyers, you're going to see other markets in Canada pick up that slack, for example, like Calgary. So we have to pay attention to how that's going to impact the national home average if we're still seeing this amount of impact by foreign buyers. Now, pulling it back into focus here in Vaughan, obviously interest rates are the key topic when we're talking with clients about obtaining a mortgage and their financing needs. and obviously positioning them between the options of the fixed and the variable, and discussing the pros and the cons of each of those products, and obviously when it comes to qualification. But what we're seeing, a majority of our first-time home buyers that we've had in our pool or in our database are started hitting the brakes and taking a sidestep right now, as obviously interest rates and the cost of borrowing are going to be more aggressive, and it's going to impact their bottom dollar, especially because it's harder for them to come up with the down payment as well as manage the monthly expenses. But another thing that we're noticing in the first-time home buyer segment is clients that maybe were looking at a single detached are now maybe reshifting their focus to a town or a semi or even a condo. Some of them are basically reshifting their focus, as affordability is still a major concern for first-time home buyers and those committed to purchase a home, whether you agree with them or disagree with them. And, I know there's a lot of people that say, you should wait, or no, you should listen. Each person is individual. They're going to make their decisions based on their wants and their needs and based on their family's goals and what they need to provide. And they will go out there and they will maybe buy a condo, which will last them a few years, and then make the move into that home at a later time. Now, taking away from the first-time home buyers and looking at what is, I think, driving a lot of this movement in the market, and it is a very big segment, is the move-up buyers. These are some buyers that have maybe been in the market for a few years, or maybe been in a house for 20 years plus. And some of them have mortgages. Some of them have very, very small mortgages and are looking to make a move into a larger home. Some of these baby boomers who are looking to retire are going from a larger home into a smaller home. Maybe they don't even need a mortgage, but it is going to add to the transaction history that we're seeing in the data, and people that are obviously selling their homes for a great amount of money and are willing to pay a little bit more for maybe that house in that area close to community centers. So that is something that we're seeing actually happening live. And as we're having conversations with our clients about options and suggestions in regards to if what's right for them, what financing solutions are right for them, there is a huge push for move-up buyers. Now, when it comes to move-up buyers, we've talked about first-time home buyers and move-up buyers, but interest rates for actually move-up buyers are not something that's really going to scare them too much. Now, let me take a step back and explain that. For many Canadians who got into a mortgage recently, let's say in the last couple of years, who have seen historically low interest rates, it's going to be a huge culture shock and payment shock. For some people that have been in the mortgage or had a home for the last 20 years plus, or had a mortgage for the last 10, 15 years, they've seen interest rates relatively at the same level right now. And that is something that, for many Canadians, they're accustomed to. So, and not to mention the cost of borrowing. If a first-time home buyer is going to take on a $700,000 or $800,000 mortgage, or maybe $1 million mortgage, right, to purchase a home, this move-up buyer might be only requiring $300,000-$400,000 as a mortgage to make that move, depending on the sale of their home. So for them, the cost of borrowing is much, even though it's more expensive, the actual monthly obligations are much less, as opposed to the first-time home buyer. And that is something that I think they were touching upon and something they were discussing in these articles. But I want to know your opinions. I want to know if you think that, based on some of the data that we're seeing come out from Bloomberg and Royal LePage and some of the opinion pieces, and even some of the data from housing starts that are coming out in the US, if you're following this type of data, I want to know your thoughts and your feelings. How much will interest rates actually impact some segments of the market? Because we can't blanket statement and say that interest rates are going to impact the entire market. They might impact specific home buyers and specific sections of markets, for example. So I'll leave the video here. I hope everyone enjoyed it. Hope everyone has a great Friday and even better weekend ahead. Once again, thank you for clicking. Don't forget to hit the share, like, and subscribe button. And until next week, have a great weekend and stay tuned. We'll see you next week.